All right, guys, here we are, part three of chapter six. We're on hour five. This is ridiculous. But we're going strong, and the caffeine, I think, is helping me. So, as we break through hour five and probably close in on hour six of this lecture, we'll go into the FAQ section. So I want to make sure I answer any questions that you guys have specifically about the momentum trading strategy. So part one was the gap and go strategy, and part two was really about the high of day momentum trading strategy, where we see stocks hitting high of day and we're buying the first pullback, moving average pullbacks, or half dollar, whole dollar entries, etc. So, those of you who have stuck it out through this ridiculously long class, um, I give you a lot of credit. And those of you watching on the recording, I'd find it hard to believe if you watched those two parts back to back. But if you did, then you are for sure extremely dedicated, and I give you credit for that too. But if not, that's okay. I won't hold it against you. This would be probably a lot to try to retain in one session. I mean, I'm giving you, I'm basically downloading everything that I know about the market from years of experience onto your mental hard drive. And I don't know that anyone has the capacity to process all of it in one session. So don't feel bad about needing to watch it twice or having questions or anything like that. I know this is some pretty deep stuff. What I've always tried to do, in contrast to what I know some of the other instructors out there do, and I don't want to give anyone a hard time because everyone does their best, I'm sure, but I know that it's really easy to talk about things in general terms, but it's hard to give you the exact details of why I get into a specific pattern or why I don't, why I sell here or why I hold, why I double here. All of those little intricacies are what I want to teach you through these classes, of course, through the live examples. My hope is that you'll really be able to get inside my mind and understand why I've taken all of these trades. So one of the things that I said before is how important it's been for me to really articulate my thought process as best as I can. And this all started in 2014 when I taught our very first day trade course. A lot of the slides that you're looking at or have seen today or over the last few days have been slides that I first made several years ago. And since then, I've refined it and taken out stuff or added new stuff, done tons of surveys of students who have graduated from the classes to get feedback. How can I make it better? How can I improve it? Because I want to see every single one of you be successful. That may be, not realistic to get 100% success, but of course it's what I want. And so if there's anything I could possibly be doing to improve your odds of being successful, I'm going to do it. And so the fact that we're on, 5.5 hours of this lecture is, me putting in 110% because I want to see you succeed. So, with that said, what are some questions that you guys have had on these two parts, part one and part two? And of course, I've tried to answer some of them along the way, knowing that you might not remember all of them. But I'm going to, let's see, move this up here, and we'll probably be jumping in and out of the PowerPoint. Okay, so let's see. Question number one, LPG. How do you know when buying or selling is coming in on the level two in time and sales? Excuse me. We know that because right here, all of the buy orders are green, all of the sell orders are red. So the transactions going through at the ask price are buys, essentially. They're buyers, and they're green. Sellers are red going through at the bid price. So that's the easiest way for us to tell whether there's buying or selling coming in to the trade. It's by watching the time and sales and seeing those orders going through. Carlos, to put the 9, 20, 50, and 200 EMA on fantasy stock traders, you can pull up a chart, and I'll just pull this back here. You go to simple moving average, go down to exponential. That'll pop up this little window here, which will say which time period do you want to use. You type in 20 and you add it, and now you'll have the 20 moving average on there. So that's it. That's pretty easy. Let's see. All right. Tim, no, definitely don't feel bad about needing to go back and watch class 2 to refresh, or watch class 1 again. Nothing wrong with that at all. Um, you guys will have access to the course for a period of 90 days from when you first joined, and then you can continue to maintain that subscription, which is access to the chat room, the mentor sessions, the course, and the simulator. And you can just continue that for as long as you want and rewatch the classes, brush up anytime you need to. Not a problem at all. Rachel, if we saw lots of selling, how can we anticipate that it's not, sorry, if we see lots of sell, can we anticipate that it's not safe to ride the momentum, especially when the sell price is near the current price action? If I get into a trade and I see I get in and right away I see a really big seller on the ask. Let's see, let me pull up a trade that I took today, or I'll do the one from yesterday on PRAN. So yesterday I had this trade on PRAN. I jumped in it, and obviously the 1 minute micro pullback worked out really well. But if I had jumped in it and suddenly we saw a 50,000 share seller at 350, I would have said, nope, I'm out. I'm getting out. I'm bailing out. That's not what I want to see. I want to see this squeeze and continue higher, not see this really big seller. Now, that's if we saw that really big seller stacked up on the level 2. So right here, we would see that big seller up on the ask. If we just saw some sells go through on the time and sales, that's not really as big of a deal as long as the level 2 is still strong and we still have a good bid. We don't have any big sellers or anything like that. But yeah, if you have one really big seller, that can really hold things down. So let's see. Will, just to make sure I understand, with a pullback, when the entry is the next candle to make a new high, the next high is when the price goes above the previous red candle's high, not the previous peak or high before the red candle. And that's correct. So in the case of PRAN right here, the first candle to make a new high after this little pullback was the break over this level right here. So the high was 75 and that candle broke it. This little candle here, that little micro candle, the high there was 44, 44. First candle to make a new high was over 44. Yep, so that's the spot we were watching. How will you trade with a small account under the PDT rule? Carlos, when I started 2017 with $583, I was trading with SureTrader. They're located in the Bahamas. They don't enforce the PDT rule. So I traded there for, I think it was like 25 days, 25 trading days until I was over $25,000. And then I took out my money and put it into SpeedTrader. And I've been trading there ever since. Armando, can I explain the difference between pre-market high entry and pre-market pivot entry? Yes, absolutely. So let's go back up here to the gap and go strategy. I'm just going to scroll back up in the slides. Gotta scroll a little ways. This was a pretty long class, I know. Let's see. All right, so there we go. Okay, so the pre-market high, let me show you the kind of annotation. So this is the pre-market high. You've got the high pre-market, right? Whatever the pre-market high is, that's the pre-market high. So today in the case of DFFN, this stock had a pre-market high of, scroll back, 469. That was the pre-market high. So entering over the pre-market high is entering literally at the pre-market high, anticipating that when we break that level, we'll get the squeeze higher. So if I scroll down here, pre-market high was 369. We broke 369. We squeezed up to 608. Here, pre-market high was 431. We broke 431. We squeezed up to 615. Let's see. Here, pre-market high was 251. We broke 251. We squeezed up to 340. Here, pre-market high was 4. We broke 4. We squeezed up to 5. Okay, so the pre-market high is literally the high of pre-market. In contrast, when you trade the pre-market pivot, you're buying before the pre-market high. So the pre-market pivot is a little bit different. When you have a pre-market high, let's say that's up here, but the stock pulls back, makes a little high, and then pulls back more, you use the high over this little pop as your pivot, right? Because when the stock is doing this, it's going low, up, lower, up, lower. So when it changes directions and finally actually makes a new high versus one of these pivots, you're kind of changing from zigzagging down to zigzagging up. So that right there is the entry point. So on a pre-market chart, let's see. Let's look at an example. This right here is an example. The high was 750, which is the pre-market high. And we consider pre-market and after hours highs kind of to be equal. This may have been after hours, I'm not sure. But the high in the after hour pre-market session was 750. But we pulled back, and then we kind of had this little pivot right here, the high over that level. So that little pivot, if we broke over that little kind of like speed bump, we could probably get right back up to 750. So that's why that is kind of my entry. Here's another example. The pre-market high is like 277, but we had resistance right here at 260 pre-market. So that's the pivot. If we break over that little 260 resistance point, there's a good chance we'll go right back to high a day, or right back to the pre-market high, which is the 70s. So I hope that makes sense. Noel, shouldn't the 1, 2, 3, 4 setups just be looked at as 5-minute pullbacks? They certainly could. Absolutely. Because it is simply a 5-minute pullback. I mean, it really is. It's a 5-minute pullback. But what's important to note about that 5-minute pullback is the fact that you made the low, 0.1, you made the high, 0.2, and then you made the second low. So you know that your entry is a little bit different. The 1, 2, 3, 4 setup is really, and I'm just scrolling in the PowerPoint to grab that slide. It's really about understanding the proper entry point. So when you look at this right here, the high of 0.2 is the proper entry point. You know, yes, you might have bought here because this is a bull flag, first candle to make a new high, and you go up, that's fine. But would you buy here? This to me is not a bull flag that I would buy because the first one failed. So the second one, I'm not going to buy that. So I buy if it breaks over this pivot. So it's really about understanding the proper entry. So the proper entry is the break over this level because it's kind of that little speed bump on the way back up to high a day. If we can break over that speed bump, we're in good shape. So, you know, yes, it's a 5-minute pullback. It is. This is just a specific type of 5-minute pullback where you have this kind of, you know, drop, pop up, consolidate, breaking over that level is the spot. Right here, drop, pop up, consolidate, breaking over that level is the spot. That's the line in the sand. If we can break that little speed bump, high of day is ours. But yes, at the same time, this is a 5-minute pullback. It's just being more detailed about the type of 5-minute pullback it is. This is a different 5-minute pullback. This is kind of just a bull flag that was a little choppy, but that's that 1, 2, 3, 4 setup. Thinkorswim has the same level 2 data that I have. Yes, definitely. I'm going to scroll up here. We're going to go over level 2 more in class 10, chapter 10. Christian, please explain multiple buy button hits. Is it doubling your position? Yeah, it is. If the order is for 2,500 shares and I press it once, That's 2,500. Press it twice, now I've got 5,000. I doubled. Press it a third time, 7,500. A fourth time, 10,000. Obviously, I could just jump in with 10,000 with one order, but I never really know for sure if I want 10,000 shares until I'm kind of watching the order flow as I'm getting in. Watching the time and sales, watching the spread, it's kind of a very in the moment decision to get super heavy or to decide to stay light. I base it on, is there a hidden seller? If there's no hidden seller, I'll be more aggressive. I might press it twice. Um, I also know that I can usually get filled smaller orders faster than really big orders and with less slippage. Even if I seem to press 4 small orders, I get a better price than one 10,000 share order. I don't know, for the way it's routed or something. So I get better prices if I do small orders, even though the commissions are a little higher. So those are kind of the two reasons. So Matt, you say you find it generally hard to not take profit when you're up 20 cents, and when it starts slipping back, you're up 10 or 15, and then it rips. I mean, for me, I understand that 100%. I would get into the habit of selling half. Take half off the table, sell half, adjust your stop to break even. If you get stopped out break even, you're out. If it continues to run, you get profit on the second half. If you try to get profit, the full position, 20, 30, 40 cents, I mean, there'll be so many times where you're up 25 cents and it goes back to break even. And you don't want to have that happen. If you got into a trade and it went up 25 cents, I mean, you were right. You had the right idea. Gavin, do you recommend over trading for a few days in FST to learn what to take and what not to take? Yeah, I think that's okay. I think that it's okay that you have a period of, a week where you're just punching the keys. You're practicing, you're buying, you're selling, you're trading a lot, getting a feel for hotkeys, getting a feel for the level 2 and everything. And then you kind of taper it back and you get into the strategy. So by the time you're, in class 6, the way you guys are now, hopefully you've kind of already punched the keys a little bit. But if you haven't, then definitely do it and then kind of bring it in and rein it in a little bit. And definitely by the time we go over the trading plans, which will be in classes, I think it's class 11, you'll want to be reining it in more. Benjamin, you said many times you take a position in anticipation of a stock hitting a level. Is that an advanced strategy? It is, for sure. And it takes some intuition to be able to feel confident getting in, in advance, or in anticipation. But if you're looking at a stock and for instance, that the first 5-minute candle to make a new high is a critical point, which of course you do know because that's a setup that we trade all the time, then when you're seeing this pattern here, you know that the price that when this price crosses, let's say it's 1176, that's your entry. So if you're looking at the level 2 and you start seeing a lot of buying at 1172, it kind of makes sense just to maybe test the water, jump in, because it might pop up really quickly. So you jump in, if it works, you're in a little early. If it fakes out and drops back down, you stop out, but it made sense to do it because you saw the volume coming in. So as long as you're trading A quality setups, I think you'll start to get a sense of anticipating the entry. Chase, when you know a stock is about to go up fast, do you put your order on the low end of the ask or the high end of the bid? I always put my order on the ask. Always on the ask. When I know a stock is going to move up fast, my order will be on the ask or maybe a couple cents above the ask because I know how fast the stock's going to move. I don't want to miss the chance of getting in. Philippe, do you deem watching price action more important than being aware of volume when you're already in a trade? That's a tough question. I mean, volume is important because you want to see continued volume. They kind of go hand in hand. I mean, the level 2 and the time and sales, that's where we're going to see the volume. That's super important. The price action, if the candles still look good, but volume died down, that is kind of a red flag. I mean, it's a little bit of a concern. They're both pretty important. Volume and time and sales is probably a little more important. Tom, I think it is. I'd have to double check to make sure you can add the 200, but I think so. Okay, so Carlos says maybe not. We'll have to check that. Jim, when there are many bids and asks on the level 2 of the same size, is it better to wait even through, even though the chart says it's time to get in? So yeah, the chart says it's time to get in, but the level 2 shows, 15 sellers all at, 310. I would wait for it to thin out a little bit. And that's where I might say, look, the chart looks good, but the level 2, it's not matching up with what I want to see. I have a big spread. There's a lot of sellers, it's the large amount of sellers that's the problem. Obviously, a lot of buyers is good, but there's a lot of sellers. There's a big spread. I need to wait for it to thin out a little bit more before I can get in. Yeah, Michael, I'm going to upload the PDF as part of Chapter 6. You can use external linking with eSignal and Trade Ideas. So the way you do that here is you go into Trade Ideas, you go to Tools, and you click on External Linking. And then you say, I want to add a link. And you say, what it says, while keeping this window active, mouse over the target window and hold down the Shift key to select the window. It's kind of strange, but okay. Press the Shift key. I put my mouse here and I press the Shift key, and now it says eSignal. So I'm like, oh, okay, I guess that works. Add the link and close. So now what happens if I double click a symbol on this on Trade Ideas? Does anything happen? Oh, it updates. So that's how you do it. The only thing that's annoying is you have to redo it every single day or every single time you close down your platform. So I guess I'm lazy because I just type it twice. It's like I just rather type it twice and have to do that linking twice or every single day. Jared, sorry I missed that question earlier. So regarding getting into a trade, whether it be half dollars or whole dollars, pullbacks, etc., and you're watching the level 2 for buyers to come in, is there a rule of thumb for when I'm looking to hit the buy button, in order that goes through the time and sales at exactly the entry point? The rule of thumb for me is I'm watching the time and sales. Let's say we're watching for a break of $3. I'm watching the time and sales. I'm watching the level 2. And if I start to see a lot of buying at 95 and 96, I may just jump right in anticipating that, look, there's tons of buying. It looks like we're going to break over that level. Now, obviously, if I saw a 20,000 share seller at $3, I would wait. But if I don't see that seller out there, I would go ahead and buy. So, when you're putting the order, you can see down, a couple tiers away that you've got $3 coming up. So you can usually see if there's a big seller. Sometimes the second you get to 3 is when that seller shows up. And then obviously in that situation, I would bail out immediately. But because I'm in early, I'm already maybe at a little bit of a profit, or I can get out break even. So the big thing I'm looking for is, to see buying at that spot. But there are times where, I'll be looking at a setup like, maybe this one, for instance, and I know that the entry is the first candle to make a new high, or, I would want to get in here at 10. And so as soon as I see even one buyer over that level, I'll press my order because I know that now that candle is making new highs and other traders are probably going to see it as well. So, there are times where I get in just as it's breaking, even without a lot of volume, but I certainly would prefer to see a good amount of volume flowing on the time and sales. You can get multiple level 2 windows in the simulator by just pressing level 2 right here. You guys can enter the chat room for 3 months. I mean, you've got 90 days of access to the classes, the chat room, the simulator, and then it just is a subscription that continues every 90 days. So it just continues and you keep getting 90 days of access. You can check, if you go to warriortrading.com and then to the dashboard, you can check your subscriptions to see the rebill schedule and everything like that. Pedro, when I bail out, what type of order do I place? I use a limit order. Definitely a limit order, 100% of the time, no market orders. And I talked about that in class 1, so you can go back and check that. But yeah, I only use a limit order. Now, my limit order is to sell now with an offset. So if If the bid is 206, my limit order will go through at 196. That's the least I'm willing to accept. It's a 10-cent offset. Now, if I go in here to the hotkey manager, I can show you, let's see, so Control Z, here we go. Hotkey with an offset 10 cents below the bid. If you'd prefer it be lower, you can change it to 5 cents or 4 cents. But it gives me that little bit of an offset. So if the stock is dropping quickly and all of a sudden 206 goes to 205 to 204 to 203, well, my order's, a little bit further down, so I'll still be able to get filled. Advice on disciplined bailing out of stops. I would say set live stop orders using, the hotkeys. Just delegate that stressful, that challenge of selling and bailing out of a loser. Delegate that to the broker. Let the broker handle it, or let the simulator handle it. So hotkeys, at least to start. It'll get you in the habit of just taking those losses. Zach, I know Thinkorswim Ameritrade has a replay where you can go in and replay the first hour of the day. So you could do that. Just watch the stocks that you know that I traded and see how you would trade them. Today was interesting because we had a lot of chop. Obviously, CYCC was all over the place. This was not easy to trade. EVOK, or is this the one I'm thinking of? Yeah, EVOK, this one was all over the place. EBI, no, there's another one I'm thinking of. EBIO, that's not it. DFFN obviously was super whippy, down, up. GBR was really tricky. Some days are like this, and when I notice in the first 10 minutes that the 3 stocks on my Gap and Go watch list all did a fake out like that, I'm going to be on alert. I'm going to be like, okay, I got to step back a little bit. I'm not seeing the type of trading I was wanting today. Maybe this is a day that I just need to step back and sit on the sidelines and wait for better opportunities. The better opportunities will come. I just have to be patient and wait. So yeah, today was a little bit of a choppy day, but I did get a couple of good trades. These classes are 3 months of access, but check your subscription. Your subscription, depending on when you joined. If you joined in 2016, we offered 1 year, but we didn't offer. There were things that we didn't offer. We didn't offer access to the simulator, stuff like that. So we also changed our prices. We dropped the price down, so now it's a 3-month class, and the price is a little bit less, includes the simulator. So a couple changes there. So you'd have to check your account to see when you joined. Zam, just send us an email, team@warriortrading.com, and we'll check. I don't think those indicators, Robert, would help velocity and forces. I think they would just kind of be distracting, to me at least. Some traders, Rachel, do use pivot levels, pivot points. I do not. So, it's one of those things, since there are a group of traders out there, collectively that will use them, they could be respected on some stocks, but I don't use them and I'm making pretty good profits, so I think you could probably do without them. Yeah, and thank you guys, John and Roberto, for being here. It's awesome to have you guys in the class. Yes, $30,000 minimum for speed trader, $30,000 minimum for Lightspeed. I believe that's also true with Interactive Brokers. It's because the PDT rule is 25,000, so if they, have you opening an account with a little bit more, they don't have to deal with you dropping below it and all of that stuff. Yes, VD. If you use Control T to set a stop, you need to cancel that stop order when you go and try to sell the position. Otherwise, you could end up being short, and then obviously that's not a good situation. So I get in the habit of pressing Control Q to cancel all of my open orders. Cancel all my open orders with Control Q. What if I buy the break, Carlos? What if I buy the first break, and stay over the second break? You mean you buy the first 1 minute pull or the first 5 minute pullback like here, and you just hold it and don't sell it here, you just continue to hold it. I mean, you can, and if you're up enough, you're up well enough, then sometimes you can afford to. You can keep that last little piece, and that's what I meant, where usually the first 5 minute candle or 1 minute candle, whichever pattern, whichever time frame you're trading on, the first candle to make a new low would usually be my exit. But if I've got a good position with a good average and I've already taken some profit, I could afford to hold through the second pullback and then add into the next leg up. So that's totally okay. And sometimes I will do that if I'm holding with a good enough average. Let's see. I'm not sure what you mean by that, Rachel, but when I said pre-market high, obviously that's the high, and the pivot would be the high of any little pop that might have happened before the bell rang. So during the pre-market session. So in this case, that pivot is the high right here, which is 62. Um, well, I don't mind holding a stock when it's halted. If it squeezes up and gets halted for a 5 minute circuit breaker halt, I don't mind holding it because it'll usually open higher. But I don't like to hold a stock when it's dropping down and gets halted because then it usually opens lower. And obviously, if a stock gets halted and you're holding shares, you can't sell them, you can't do anything, you just have to wait. So if I see a stock that's halted, I can't buy it until it resumes trading. Um, Tim, I'm going to upload today's PDF, so you'll be able to open it up on the PDF and print out certain pages that you like. And how do I know on level 2 that there's a hidden seller? If we see, there right now is 1,600 shares at 186 on this stock. So if we saw thousands of shares going through on the time and sales, buyer, 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 and that's not moving, there's a hidden seller. So that's the way you can tell. It's just by watching and realizing, okay, I'm doing the math here, and more than 1,600 shares have been bought, and that guy's still sitting there. He's obviously a hidden seller with a much larger order behind that 1,600 shares. I'm just reading this question, but I'm not totally sure. Um, and yeah, Rachel, sometimes you will have, you know, all of a sudden the seller moves, buyers jump in, the price pops up, and then suddenly he's back. And it does seem like maybe there is some manipulation there. I mean, obviously, that's, illegal, but it doesn't mean it doesn't happen. Someone who's got, a $500,000 account or $1 million account, they could put out huge orders and that could frighten traders, the fear and the greed. So that could potentially cause traders to get scared and get out of the trade. Of course, if your broker saw you doing that type of thing on a regular basis, they would flag you and they'd probably close your account. Um, so heavy resistance on the level 2 is when you have that really big seller trying to sell 5, 10, or well, really 15, 20,000 shares, big size. Richard, when using the hotkey to sell 50%, is the second 50% based on the remaining? Yes. So now it's 25% of the original. It's continuing to be based on your current position that you're still holding. Lance, when I'm in a trade and selling a stock on the ask and the order is not filled, could I switch to the bid or do I need to cancel it? Well, if the stock is not shortable, I would need to cancel it. If my order on the ask is just to sell half, then I could sell the other half on the bid. But if the stock is shortable, then I could, but if that order on the ask gets filled, I'll be short the stock. So that's why I would instead I would prefer to just cancel the order first and then hit the bid. Or sell in halves, half on the ask, half on the bid. The hotkey to move my stop to break even is Control B. B is in break even. B is in boy. Tim, do you want all the Excel data from our beginning trades when we're just punching buttons, no, that's not going to be super helpful because it's not going to give me a lot of a indicator of how you're trading when you're really like, trying to trade the strategy. So you can wait until the log starts, kind of the day you're like, this is day one of me taking it seriously. David, if the pre-market high is broken a minute or two before the market opens, which happens sometimes, do you get in at the new pre-market high? Yeah, I have to. And sometimes it is considered chasing, which is why I have to wait for the first pullback. And it's so annoying when that happens, but it does happen on a fairly regular basis. Oh, if Questrade doesn't have the option for selling half or quarter position, well, that's tricky. I would, personally, I'd probably open an account with Interactive Brokers. But, pending that option, you could trade in increments of 1,000 shares and put your sell orders in increments of 1,000. So if you buy 2,000, your sell orders are to sell 2,000. So basically, instead of having sell orders to sell half position, you're selling by 1,000 share blocks. So, you buy 4,000 shares and you sell 4,000, 1,000 at a time. Let's see, Tom, is it also the case to buy on the ask when the spreads are large? And yes, um, I will buy on the ask even with big spreads because I want to be buying with all the other buyers at the breakout point. But, I will probably be really cautious about buying a stock with a spread of more than, 10 or 15 cents. That trade I took, that example on DRYS, it was higher priced, bigger spreads. The risk was definitely higher on that trade. Oh, and that's good. You were able to add the 200, so that's good. Rachel, is there a column indicating the total current buyers and sellers? Some level 2 platforms will show you the total. Others just show you each person on each market maker. So you kind of have to add it up. But if you see one really big seller, you'll see that large order for 50,000 shares or whatever it might be. Let's see. No, I'm not concerned with selling on the bid, on the bailout. I mean, obviously, I'd love to sell on the ask to get the best price, but if I, want to just hit the bid and take some profit, I will. Obviously, that'll show as a red transaction on the time and sales. Other buyers might see that and think, oh, someone's selling, but, I mean, I'm just one order, so I don't think it makes a big difference. I might as well just take the profit if I want to, but I'd always try to get out on the ask to get the best price. It just depends because sometimes, the stocks move so quickly, you're like, whoa, I'm up 5,000. I gotta just grab a little bit of profit, and so that's when I hit the bid. Gary, what do I look for to see many buyers on level 2? Should I have a positive or negative offset on my hotkey to get out fast on the ask? Okay, so Gary, you don't need an offset on your order to get out on the ask because you want to get out literally at the ask price. That's the best price. If you're putting the offset above the ask, you're putting out an order hoping the stock continues to move up. If you want to get out immediately, you sell on the bid to a buyer. But if you want to get the best price, you sell on the ask with no offset. Matt, when I say a 20,000 share seller on tier 2, would it say 200? And yes, because it always adds 2 zeros. Yeah, the only time you see something more than 2 digits is when you have 100,000. So yeah. Mhm. Bracket orders to me, I don't like for day trading because, and we're going to talk about this in class 10, but the reason I don't like them is because I don't want to put a cap on my profit. I want to put a cap on my loss, but not my profit. So what I would prefer to do instead is just put out a stop order. Now I know some people say, well, the problem with that is you have to cancel the stop order before you put out the sell order, which is true. but I don't want to cap my winners. When you have a good setup that can go, 20, 30, 40, 50 cents, you don't want to sell it when you're up 5, 10 cents because that's what your bracket order said, told the broker to do. The exception would be when you're in the process of building a tiny account. When you're in the process of building a tiny account, like a $500 account, you need to take 10-cent winners every time. Just take the winner, take the winner. Lots of small winners, lots of small winners. Collect those little wins, and it helps build up your account. And then once you get a little bit of a buffer, then you can hold some of them for the bigger move. Because when you're trading with small size, you can't afford the commissions of selling half and adjusting your stop, selling another half. So you want to just take the profit. I didn't trade during the 2001 dot-com bust, although I did paper trade during middle school as part of 7th and 8th grade class on the stock market, and that was in the late 90s. So I was dabbling in the market. SureTrader, Active Web, hotkeys. I don't know if they have hotkeys on Active Web. That I don't know. I'm not sure. Morgan, Ross, are the market makers usually trading with the big price moves, or are they trying to balance out the price action? That's interesting. I'm not sure. I don't think that market makers are controlling the price action as much on stocks under $10 as they might be with algorithmic trading on stocks $20, $30 and higher. So I think for the most part, the stocks under $10, the volume is predominantly retail traders like us buying and selling. So it's our orders getting matched up against each other. That's always been my feeling. And they say that, over 60 or 75, 60, 70% of the volume in the whole entire market is algorithmic trading, high frequency trading, which is, if that's true, it's going to be higher on those stocks like, the stocks with really high price or high volume, like SPY, Bank of America, Siri. Those are the types of stocks that you could trade millions of dollars each day. And as a high frequency trader, you can do really well. You can't trade under $10 stocks with low floats, floats under 100 million shares like that. So I think the market makers, for the most part, are not really actively making the market in the same way on under 10 as they are on over 10. Benjamin, I try to use hotkeys to make trades in FST, and I always end up in positions that I have no idea how I got into. That is the risk with hotkeys, that you can make mistakes like that, especially if you have multiple windows open. Is it possible? I suppose it's possible there's an issue with the simulator, but I don't think so. I think that the issue there probably is you're pressing a hotkey without realizing it. I would turn on your confirmations for right now, just so you make sure when you put out an order, you know that you put one out. Let's see. Stan, most of your examples are 5-minute charts. While the 5-minute candles may be consistent, the 1-minute candles are going from green to red and bouncing up and down. Right. So do you ignore that? How do you respond to that? That can be a challenge, because when you look at a 5-minute setup, and let me see if I can grab one here. You might look at a 5-minute setup and be like, wow, that was super clean, right? But inside this 5-minute setup, the stock went up to 8 and then might have pulled back to 770. That's like a 30-cent pullback. Might have looked really bad for a moment with a big doji. If you enter on the 5-minute chart, you try to hold on the 5-minute chart and to not get distracted by the 1-minute stuff. Try to. With that said, you take profit when you hit your first profit targets and that sort of thing, but you try to hold that final position until you get an exit indicator on the 5-minute time frame. Even if the 1-minute looks choppy, you trust the 5-minute. You took the pattern on the 5-minute, so you want to trust the 5-minute as much as you can. But yeah, once you hit your first profit target, you definitely want to take it. Even if the 5-minute still looks great, you want to take your profit. Augustus, how does the control B sell long at break even hotkey work? It's a stop at break even. So if you're up 20 cents from your average cost, that stop at break even will stop you out flat if the stock goes back down. So it's a break even stop. It's not something you really want to have fire. You'd rather sell at a profit. But if you went from being up and then you came back down, that's where you would get out flat. Bob, is there a meaning? Let's see. Is there a meaning of telling if a flat top is more likely to break high or low? Well, I mean, an indicator that a flat top is more likely to break to the upside would be, that it's holding up really well, that you're seeing some nice accumulation, you're seeing more buying, you're seeing more green candles than red candles. Doesn't mean you won't have a false breakout. This one right here is kind of a long, flat top, tapping once, twice, three times, consolidating, more green candles than red. I mean, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 green candles versus 1, 2, 3, 4, 5, 6, 7 red. So twice as many green candles. That shows more accumulation to the buy side. So that's kind of what I would look at on a flat top breakout. Are the candles green? If they are, that's good. What's the price? Is this a really popular stock? Super high relative volume, et cetera, et cetera. Let's see. Tim, since I don't know when you joined, but classes are released every 2 to 3 days. So if the others say coming soon, it just means that that they haven't been released yet. Let's see. Yeah, Benjamin. So yeah, you want to make sure you cancel those orders before you put in new ones. Richard, yes, you can share with me on TraderView. That's okay as well. You can send a request for me to be your mentor, and I can check it. Oh, so Richard says in Questrade you can sell in increments in IQ Edge. You can edit your hotkeys to sell portion of a position. So that's great. If I move my stop to break even, do I have to cancel the other stop first? The answer is yes. Tim, will a USB to HDMI adapter allow me to use multiple monitors for my Lenovo laptop? Yes, it will. That's exactly what I'm using. Let's see, I've got a couple of them over here. I've got a couple monitors that I'm not using right now, but let's see. This is one of them right here. So this is the Diamond USB to HDMI adapter. I'm actually using it, so it plugs into my USB drive right here. I'm actually using it with a not an HDMI cord. You can use it with a bunch of different types of cords, the DVA and whatever that other one's called. But I'm using it right now on this older monitor with one of these cords. I don't know what this is called, VGA? I don't know. But yeah, so you just plug it in, and then like that, I can run those monitors on this Lenovo. Just plug that in. It's good to go. So I've got like 6 of those things. I should become a rep. Who's a better broker, Interactive Broker, Speed Trader, or Lightspeed? It kind of depends on your trading style. The better one is probably the one with the lowest commissions, since they're all almost equivalent in terms of functionality. They all use very similar software, if not the same software. Speed Trader and Interactive Brokers use the same software. Lightspeed has their own platform, but it's a pretty good platform. So they're all so similar, it's kind of personal preference and maybe which one you're able to use because of the country you live in, stuff like that. Like Lightspeed doesn't accept Canadians, neither does Speed Trader. I'm not 100% sure about Interactive Brokers. Benjamin, is there a chart that shows how many are holding a short position of the stock? What you have is not a chart, but a single stock window right here in Trade Ideas. And this will tell you when you scroll it down the short float, the percentage of the float that's short. So you do the math, 2% of 3.5 million shares. That's kind of how you do it. So what is that, 70,000 shares or something? So not a lot, particularly on this one, but another one that might be 10% or 20% would be more significant. In order to configure the scanners on Trade Ideas, do you need the premium subscription? Nope, you don't. I have the standard one, and that's fine. How can I improve my accuracy in my trades? Carlos, well, I'd have to look at your trades to know for sure. But for the most part, accuracy is about trading the best quality setups. Trade the best, leave the rest, right? So look for those really clean bull flags, the really clean, flat top breakouts, the 1 minute micro pullbacks on the strongest stocks. I mean, ultimately, if you're following the lessons in this class and you're absorbing everything that I'm teaching you, then it comes down to practice. Practice what I'm showing you. Do everything you can in the simulator to kind of understand what I'm doing to make a profit, on my trades, and sort of try to figure out, okay, this is the strategy. These are the stocks. Focus on quality versus quantity. Take the same types of stocks, same trades, same setups in the simulator. I don't want you to follow, but I want you to, see what I'm doing and really try to understand and figure it out. And I'll obviously continue to do midday recaps every day to recap and break down why I took the trades I took. Yeah, Interactive Brokers has level 2. Yep. Let's see. Christian, do you favor MarketWatch or Benzinga for breaking news or current news? I favor MarketWatch for searching for the headlines each morning. Benzinga I have for Squawk Box audio, but you probably haven't noticed me listening to it as much lately, mostly because I used to listen to it every single day because I always had it already turned on that computer. But then you guys said that my audio sounded a lot better with this headset instead of my freestanding microphone, which I have over here. So I was like, all right, well, you guys don't want me to use this. That's fine. I'll use my headset. But then the Benzinga comes through my headset, which means I can hear it, but you guys can't hear it. And I don't really want it in my headset because I don't really care about it that much. So now I just kind of haven't been using it. But I never really made that much money trading breaking news. Anyways, it's not a primary strategy for me. It's sort of a secondary that I'll pull out every now and then when we see a good setup. David, we will talk about adding liquidity and getting those ECN rebates by selling on the ask. And you still get them if you sell under the ask by a penny. As long as your order is not marketable, you'll be adding liquidity. Positions from the prior day, if the position is still open, then you need to close it. If it shows quantity as 0 and it was a trade from yesterday, you'd have to show that to me. I don't know why it would be still showing. Larry, is there a difference between control? Let's see. Is there a difference between control key for selling on the bid or selling on the ask? Yes. Selling on the bid is control Z, X, or C. Selling on the ask is control K, L, or semicolon. Those are the 3 keys for full position, half position, or quarter position. Yep. Now, control T is a stop 20 cents below the current price. That's just a stop order. It's not to sell, it's just a stop order. All right, Roberto, we will see you first thing tomorrow morning, which for you is 3:30 in the afternoon. So you get to sleep late. All right, let's see. All right, Armando, I'll see you tomorrow. Rachel, I mentioned the 9EMA provides safe pullback entries. Can you explain that? Which stock did you try the 9EMA pullback on today? See, now I don't really just simply buy a stock because it's at the 9EMA, just because this is at the 9EMA. I really am going to focus in on buying because we have, this pullback. The first 5-minute candle to make a new high. If it happens to be at the 9EMA, that's ideal. This was a little above it, this was right at it. But my entry is really the first 5-minute candle to make a new high. Or the ABCD setup. The moving average pullback we talked about as being one of the patterns we see. It's a little bit more difficult because the exact entry is not as precise. It's kind of like at what point is it doesn't have an exact apex point, which is the challenge. Is it correct when you sell at control B break even, it's not guaranteed to get a precise? Yes, I mean that's true because you will get some slippage, almost definitely. Um, you'll get some slippage on that. Christian, when the market tanks, like losing 2% or 10% as it will someday, will we most likely be shorting through the entire bear market? Um, well, I don't know. I mean, since I really, have been trading in the last 7 years or so, we've been in a bull market. I mean, yes, we've had some extremely volatile markets. Let me pull this back since 2010. The real recovery. Um, we pull this back here. The really bad time was 2008 and 2009, right? And then 2010, we started bouncing back up. This is when I lost money in the market with mutual funds, and I was like, "This is ridiculous." I should trade my money on my own. And so I took my money out and then I started trading on my own. I mean, if I left my money there, obviously it's gone back up. But at the same time, you know, I I wouldn't have gotten the same return as actively trading it. So I don't know. I think that yes, if we go into a period of long sustained drawdown, that will change the strategies a little bit. But the reality is, right now, I do better when the market is red. I have better success on days when the market is down. So I think that there will always be opportunities to trade to the long side, um, because there will always be stocks coming out with great news. A biotech that has a fantastic new treatment, or a therapeutics pharmaceutical drug, pharmaceutical company that has a new drug, or FDA announcements. I mean, those things are always good for those companies. There will always be companies moving up. Matt, no, when you go into the simulator, you should have all of my hotkeys predefined. The ones that I've built should load, and you should see all of these. So if you don't, just send me a screenshot, and I'll have our guys look at that. Um, okay, so let's see. If Augustus, if I use Control B hotkey after I pressed Control P, is the break even hotkey based on the initial entry, or it's based on the initial entry? Yeah, it's based on your average cost. US, no rebates at SureTrader. They don't do rebates, unfortunately. You get rebates at Lightspeed, SpeedTrader, and Interactive Brokers. Rachel, I would just keep practicing. You're in the simulator, so right now you're still at the beginning of the learning curve. We're at class 6, but of course you can go back and rewatch some of the early classes. Keep practicing, keep studying the charts. I know for my first few years that there were times where I've said I felt like I was looking at, sheet music. I mean, it was like a foreign language. But, I kept with it. I kept focusing, I kept studying, and eventually it started to click. If it feels overwhelming, focus on one setup, one pattern. Master that one pattern, and I would suggest the bull flag. Um, let's see. Do you have the hotkey script for Interactive Brokers? I do for DAS Trader that's you can use with Interactive Brokers. I don't have anything for Ninja Trader though. All right, Monty, we'll see you tomorrow. I could run all of my monitors. Actually, I think you can only run 6 off of one laptop. I think that's the limit. So I could run 6. And so yeah, I mean I could run 6 and then the other couple I could run on my other laptop. But I don't have a desktop computer. I have 3 laptops. That's it. Are higher float stocks expected to make parabolic move better than low short float interest stocks, assuming both? Okay, let me rephrase. I think what you meant to say here, um, would a higher float stock make a parabolic move if it had, I think there's a little bit of a typo here. If you have two stocks with the same float, obviously the one with the higher short interest it has more potential to make a parabolic move. If you have a stock that's a 50 million share float and has 50% short interest, is that better than a stock that has 20 million share float and 5% short interest? That's kind of tough. It really depends on the catalyst driving the stock that has the bigger float but the higher short interest. It's possible that you could get a very intense short squeeze because of that high level of short interest, but it's hard to say for sure. Christian, let's see. Okay. What is a large short against a stock that might create a short squeeze? Basically, we're just looking at short interest. And short interest is not always 100% accurate because this may be a quote, a short interest quote from 2 weeks ago. We don't know really how updated this statistic is. So, um, you know, generally it just comes back to trading the patterns. These are our fundamentals. So we have a sense of, okay, well, this is the level of short interest, this is the current float, et cetera. But it doesn't necessarily mean with any certainty that the stock will move up or that we will get a short squeeze. Comes back to the chart pattern. Is the chart pattern strong? Are we getting the first pullback? Are we seeing lots of momentum? And if we are, then maybe the squeeze will start. It's really hard to predict, Morgan, when a stock is going to plummet at the open. Some of them do, like CYCC. The bell rang and this thing sold off pretty hard, and I don't really know why. It was, I guess, it's too extended pre-market. Well, what about GBR? This one looked fine pre-market and then just tanked. You don't always know. And so even with this stock, if I had taken the trade, I wouldn't have lost more than 20 cents. I had a stop. I had a max loss. So if you're right, 65, 70% of the time, you'll do great. And if that means you're wrong 30% of the time, 35% of the time, and that's okay. I'm wrong 30% of the time, and that's totally okay. So this is just one of those times where I was wrong. I take my loss, I get out, I look for the next trade. Well, the market, never closes for more than a week. But if the market closed for a week due to a period of instability, there was a crazy, something crazy happened. Obviously, we're not going to be able to trade. There'll be nothing to trade. We'll just have to wait. That's kind of like apocalyptic times, though. Um, you know, so it's kind of like hard to say. Karine, with DAS Trader, well, I have hotkeys. I don't have with Interactive Brokers. With DAS Trade, you can use DAS Trader with Interactive Brokers and use the exact same hotkeys. So I don't know if you would still have to pay for level 2 with Interactive Brokers, though. I think when you subscribe to DAS Trader, you can unsubscribe from some of the Interactive Broker fees. You'd have to check with them, though, but you shouldn't need to double up. Rachel, when I draw it to show you guys, but I can visually see the lines. It's kind of like when you look up at the Big Dipper and you can visually see the Big Dipper. You just you see it enough times, you can kind of connect the dots. Yeah, David, commissions at Interactive Brokers are per share only, which is why it's kind of not ideal if you're trading 10,000 or 15,000 shares. You'll really pay a high price in those commissions. Let's see. The website I was using for the trades is TraderView, and I'll bring this up here. That's right here, TraderView. I'd have to look into that. I'm not totally sure. I'm not totally sure. That's a good question. I'll look into that and get back to you. I think generally if the float is low, the way it will trade today will be limited supply, which means with high demand, it could make a quick move. Um, there's no free charting software because any provider, I mean, they're putting a lot of time and money into developing the software, plus they have to pay exchange fees to get real-time data. So you could use TC2000, which is, I think, $40 a month, and that's a great platform. I'm using eSignal, which you can see right here, but it's like 170 a month. So you don't need to use this. And this has level 2 and everything. If you don't need level 2, you just want charts, I would use TC2000. Yeah, you could use Camtasia for screen recording. That's what I'll use for. That's what I use for the classes. Just I screen record with it. When the price suddenly dips, I see you usually wait a moment before exiting. It's true, and I don't always know if that's at the end of the day. Some of the times I wait and it pops back up. Other times it ends up dropping even lower. If I just had the habit of bailing out, I'd probably be exactly the same as, the few times that it ends up going up. So I think that the best approach is just to bail out. Oh, you could use Thinkorswim. They have a replay of the market, so you can trade it after hours. Benjamin, you just use a USB video out to a USB splitter, and then the adapt, and then. So I'm using a USB extension cord, basically a USB hub that has 7 or 8 USB ports. And each one of my adapters, these ones over here, is plugged into one of those. And then I also have a couple other things plugged into it as well. Um, so then you go into your computer and you go down to, let's see, you go to settings. I can just show you. You go into settings here. You go to, see, this is weird. System, display, yeah, system, and then you go, here's the display. So I've got 1, 2, 3, 4, 5 monitors connected right now. Click identify, and it'll label, this one's number 4 up at the top corner. So yeah, so you could, I could drag these and move them around if I wanted to change it, and that kind of thing. I won't do that right now though. You have to keep above 25,000 for the PDT minimum. I don't know if they give you a hard time if you're at like 28,000, because they used to only have a $25,000 minimum. So I'm not sure. I'm not totally sure. They may have changed their rules on that. If you don't have the scanner yet, the best way is just to ask someone in the chat room. Because yeah, Flow isn't always on Yahoo or these other places. So if you ask someone in the chat room, someone can tell you. So I know we've covered a lot of material today. I mean, without a doubt, this has been a very long class. We're at 6.5 hours right now. So those of you who stuck it out, you've really you get an A for effort. So this class has been split up into 3 sections. So we've got part 1, which is like 2.5 hours, part 2, which is 2.5 hours, and then part 3, the FAQ, which is about another hour. So we've got 3 parts. I'm sure many of you who are watching on the recording space this out over a couple of days, and you may have questions. You may need to watch it again because this is obviously a lot of content. This is the meat of the class. This is one of the most important classes for you to watch. I wish so badly that I had had a class like this that I could have watched when I was getting started. I didn't have this. I was totally on my own, And that's why it took me so long to, get to, where I am today. And really, that's why my strategy development phase was so extended. For you guys, it doesn't have to be. Roberto, I mean, I know he was up and trading profitably within a year. John, he picked it up pretty fast as well. So, it's something that I hope this class will really help you speed up that learning curve. But don't feel bad if you need to watch it a couple times. Go back because I know there's a lot of detail. I'll keep adding live trading examples. We'll keep, building this out. When I do teach this class again live, the next time, I don't know, I'll probably do it over 2 days, but and then just put it together as part 1, 2, and 3. But in any case, every time we teach this class, it gets a little bit better. So your feedback certainly helps. At the end of this entire course, I will ask you for feedback because that'll help me make this a better class for the traders who come behind you. The next ones who come along, and I hope that you'll be, of course, in the community, continuing to trade with us and provide support to those beginner traders because you'll remember what it was like to be a beginner and how confusing some of these things were. Okay, so let's see. So I think that pretty much answers the question. And Rachel, with level 2, obviously my accuracy is 70%. So, this is a strategy that I've been using for a really long time. Consistency is, not something you're, just kind of gambling on. It's a strategy that I can rest my shoulders on or rest my hat on, knowing that this is sustained over the long period. But it does take time. And at first, level 2 is jumping around so quick. I know it can be overwhelming. So just keep watching, keep practicing. The class is coming up. We'll get into more detail on level 2, and that'll help. Class tomorrow will be on the reversal trading strategy. So a completely different strategy from momentum, the exact opposite in a way, but an important strategy to understand because when you can begin to sense reversals, you'll be able to start seeing when momentum is getting overplayed and when traders who will take the opposite side are going to start coming in looking for an opportunity. All right, so we'll call it an evening there, right at 6.5 hours, and I hope you guys all have a great evening, and I will see you first thing tomorrow morning in just a few hours. All right, guys, I'll see you in the morning.